under the triple lock still gives a boost, but you need to plan ahead and watch out for tax cliffs as allowances remain frozen. I hash what it means for different people: pensioners, workers, savers, future retirees. If you're retired or near retirement, the upcoming pension rise is good news, but check all your income sources. If you have only state pension, you might avoid tax under new protections. But if you also get private pensions or other income, total income may exceed tax-free allowance. If you're a worker using salary sacrifice, from 2029, pension saving will become less tax efficient. You may want to review your pension contribution plan now. Consider spreading contributions, switching to non-salary sacrifice contributions, or exploring other retirement saving options. If you earn modestly or use auto-enrollment pensions, you're less likely to feel the impact, but it's still a good time to review your long-term strategy. If you're young and planning for retirement, start thinking long-term. Relying on generous salary sacrifice perks may not pay off. Building a diversified savings and pension strategy. Right pointing magnifying glass why this budget matters and why it's a turning point. This budget isn't just a small update, it's a mate in how pensions, taxes and savings work by increasing state pension support, good for ease, but cutting back on workplace pension perks, savers and workers, the government is reshaping long-term retirement planning. The balance is state-funded pension support is still honored, but saving incentives are being curbed, presumably to ease fiscal pressure and raise revenue. Norton Rose Fulbright +2 PwC +2. What this means is, if you had now is a great time to review your pension plan, adjust your savings strategy, and stay informed. Pension planning in 2025 and beyond will require more than ever before. Clap aboard what you should do right now. Review your pension contributions, check if you use salary sacrifice. If yes, calculate what the new 2029 cap means for you. Check total income, state pension plus private pension plus other, to see if you might cross tax thresholds in future. If you're a saver or worker approaching retirement, consider diversifying your savings, maybe using personal pensions or other tax vehicles besides salaries. Follow pension closely, subscribe to us, like this channel heavy HMRC symbol, because rules may evolve as new legislation rolls out. Share video with friends or family. Many people may not realize this and how they'll be affected. If this update helpful, so like button, subscribe more pension news and update, and drop a comment. What do you think? Is the state pension right for you, or are you worried about the sacrifice cap? I read all comments and thanks for watching, and I'll see you in the next up. Keep your pension safe, informed and growing. What's changing? Big moves from the 25 budget. The 2025 autumn budget has confirmed that from April 2026, the full new state pension will increase by 4.8%, meaning weekly and yearly payouts will rise. WTW +2. Norton Rose Fulbright +2. This is the result of the government renewing the triple lock guarantee for pensions. Good news especially for those relying on state pension income. WTW +1. At the same time, the government has announced a dramatic change for people using salary sacrifice to fund their workplace pensions. Starting April 2029, only the first £2,000 per year of sacrifice salary will remain exempt from national insurance contributions, NICs. Any pension contributions via salary sacrifice above that threshold will now attract NIC from both employee and employer. EQ plus www.hoganlovells.com +2. That's a big reduction in the tax benefit many savers, especially middle earners, have enjoyed for years. The government estimates reform could raise billions, and says it aims to make pension saving and more sustainable. Investment +2. PwC +2. Warning sign #why this matters, affected and how. For retirees or those near retirement, the rise offers relief, extra income helps, especially with rising lists. But if you rely solely on state pension, this is straightforward. If you also draw on private pensions, saving, or other income, the combined income might push you into tax liability, especially as income tax threshold frozen. Standard life +2. Lonsdale Services +2. For workers contributing heavily through salary sacrifice, this change could hit their take-home pay or reduce long-term pension gain. If you currently sacrifice much more than £2,000 yearly, your tax-efficient contributions will be less attractive from 2029 onward. For modest earners or those contributing small amounts, if your contribution via salary sacrifice is small, under £2,000, you may feel little to no impact. So for many everyday workers, pension saving remains reasonably efficient. People's Pension +1. For future pension planning and younger workers, this signals a shift. The government is reducing tax perks on voluntary pension saving through salary sacrifice, which means relying solely on those perks for retirement may no longer be wise. Diversified saving, including standard pension contributions or other long-term saving investment strategies, may become more important. Right pointing magnifying glass what you should do right now. Action steps. If you or someone you know acted by these changes, here's what to consider doing ASAP. Check your contributions. If you use salary sacrifice, find out how much you contribute annually. If you contribute above £2,000, start thinking about how the 2029 cap might affect you. Review total income sources. If you're a pensioner or near retirement, add up all your income, state pension, private pension, savings, income from other sources, and see if you might cross tax thresholds in coming years. Reassess retirement saving strategy. For savers, maybe consider mixing pension contributions with other savings investment vehicles. Don't rely only on salary sacrifice. Stay informed. Pension rules are changing. Keep watching trusted sources, like this channel, to stay ahead of news, especially 2029 approaches and legislation becomes. If needed, seek advice. If your savings are significant, or you have complicated retirement plans, consider to a financial advisor to review the new landscape. Cap 1. The state pension is set for another major increase, but there's a twist. Yes, the state pension is increasing in April, linked again to the triple lock. But the government quietly released new projections that show something surprising. Inflation is falling faster than expected, but wage growth is still running high. And that creates a huge problem, because as many experts are saying right now, the triple lock is becoming too expensive to keep, but too dangerous to scrap. So this year's increase is going ahead. But behind the scenes, discussions are happening that could change the triple lock forever. And if you're under 60 today, this could affect your future pension amount significantly. But don't worry, I'll break all that down shortly. Let's first talk numbers. Cap 2. New 2025 pension rates, what you will get. The full new state pension is expected to rise by between 8.2% and 8.6% depending on how wage growth settles. That means the weekly will jump from roughly £221 per week around £240 per week. Yearly, from £11,502 to £12,500. Now, if you're on the older basic state pension, don't worry, you're also getting an increase. Many pensioners have been messaging the saying, will this actually help with bills? Or is it just numbers on paper? Let me explain. For the average pensioner, this increase means around £20 to £30 extra per week, depending on your specific circumstances. It's not life-changing money, to help cushion the rising costs of energy, rent, food, and heating. However, and this is key, Not everyone will receive the full amount. And that brings us to the next major issue. Key Cap 3 national insurance years are more important than ever. This year, the DWP is tightening checks on national insurance gaps. If you have any NI gaps between 2006 and 2021, is running out to fill them. The government already extended deadline once, but experts say the window could close soon. And here's something many people don't realize. One missing year of NI can cost you over £300 per year, for life. So if you're between the ages of 45 and 65, checking your NI record is one of the smarter things you can do before the new state pension rules kick in. Cap 4 major pension credit changes, and why thousands of people aren't claiming. Pension credit is increasing this April, but here's the shocking part. Around 800,000 pensioners in the UK still aren't claiming it. That means people who could get extra weekly help with rent, free NHS care, free prescriptions, cold weather payments, free TV license, if over 75, are simply missing out because they don't realize they qualify. The new threshold is rising to around £218 per week for single pensioners and £332 for couples, which means even more people will now qualify. The DWP is also launching a new auto-check system in 2025 that cross-matches income data to identify pensioners who should be getting this help. So you might receive a letter soon if you're eligible. Key Cap 5, will the triple lock survive? Here's the truth no one else is saying. Okay, let's talk about the big elephant in the room. The triple lock is becoming extremely expensive. This year's increase alone will cost the government billions. There's growing pressure from several MPs to replace it with the dual lock or an inflation-only lock. But here's the politically honest truth. No party wants to be the one that scraps it, because pensioners are one of the biggest voting groups in the UK. So here's what's likely going to happen. The triple lock stays for 2025. A review begins in late 2025 or early 2026. New rules for younger generations may be introduced. People under 40 or 45 would see a modified version. If you're already on your pension, don't worry. If you're close to retirement, your risk is lower. Under 50, your future triple lock may look. Key Cap's 6 big news for workers. State pension age review incoming. The next review is underway and could affect the timeline for when people currently 66. Plan 67 by 2028. Considering 68 between 2037 to 2039. But here's the huge update. Experts are now suggesting the government may delay the increase because life expectancy has dropped for several years. So the good news is, your state pension age might not rise as quickly as once planned. Key Cap 7 energy bills, cost of living payments and benefits for pensioners. The government is preparing a new support package for vulnerable pensioners, especially those with lower incomes. This includes new warm home discount rules, a possible extra winter support payment, more targeted cost of living help, council tax assistance. These details are expected to be finalized in early 2025, so make sure you're subscribed because the moment the announcement drops, I will cover it. Key Cap 8, what you must do before April 2025. Here's your checklist. Heavy checkmark, check your national insurance. Heavy checkmark, apply for pension credit if you buy. Heavy checkmark, track the new pension rates. Heavy checkmark, review your private pension pots. Heavy checkmark, stay updated on state pension age reviews. Heavy checkmark, make sure HMRC has your correct details. Doing these now can increase your income, avoid penalties, and protect your retirement. Key Cap 9, final thoughts. What this means. Whether you're already retired or planning ahead, here is huge for pension changes. The system is shifting, the government is adjusting rules, and millions of pensioners will feel these effects. But don't worry, that's why UK Pension Desk is here. I simplify everything, keep you updated, and make sure you're never left behind by the complicated pension system. So if you haven't already, hit that sub button, drop a like, and comment below where you're watching from, because I love seeing our community grow. Hello, welcome back to UK Pension Desk. If you're new here, hi, I'm your name, and I break UK pension news so you can understand what really matters for your savings and future income. Today's update is important because the government's big pension-related change in the Autumn Budget 2025, and they affect millions of people, retirees, pension-savvy workers, and even those still years away from retirement. Sit tight, stay with me until the end. Don't forget to hit like, white heavy check, subscribe bell, and share this with anyone who gets a pension or is saving for one. Let's unpack what's changed and why you should care. White heavy check mark what's new. Pension rise plus up. Good news for many pensioners. Government has confirmed that the state pension rise by 4.8% from April 26, thanks to the long triple lock guarantee, which increases by whichever is highest, inflation, wage growth, or a minimum 2.5%. Norton rose Fulbright plus 2 LCP plus 2. That means receiving the full new state pension will see their weekly payments go up, and over a full year, this translates into a noticeable boost. Royal London for Advisors plus 2 Standard Life plus 2. For retirees relying primarily on state pension income, this is a welcome relief given rising living costs. Warning sign hash the hidden catch, tax threshold freeze and what it means for future pensioners. But, and this is a big but, there's a catch that could hit many pensioners in 2027 and beyond. The government has frozen the income tax allowance at the current level. Standard Life plus 2 Norton Fulbright plus 2. Because the state pension after the rise might approach, or even pass, that tax-free threshold, many pensioners whose only income state pension could end up paying in. Norton rose for 2 LCP plus 2. Means for some, the nice-looking pensioning might be partially eaten by tax, serious issue especially from fixed incomes. Now, the government will try to protect pensioners whose only income state pension, but details are still vague and nothing is guaranteed yet. Royal London for Advisors plus 1. So, retirees, those planning ahead, should keep on tax thresholds and think carefully about yearly income, state pension, private pension plus other income. Briefcase big change, salary sacrifice pension cap, impact for workers and savers. One of the shocks in this budget, and something that affects workers, savers and retirees, the new rules. Until 2029, only the first £2,000 per year of pension contributions via salary sacrifice will be from National Insurance, NI. Contributions beyond that will be NI, meaning the tax-efficient boost many savers counted on goes away. Gov.uk plus EQ.com plus 2. This because salary sacrifice has long been used by employees, especially higher earners, as a way to boost pensions while